BTC breaks our level of interest at 76K. ES bulls break up to new all-time highs. Will Bitcoin follow? Let's dive in and talk about it. Starting out here at the bigger picture on the weekly, as always, we're going to start with the larger time frames. I want to take a look at our levels here real quick. We had suspicions here at the 75K. That was a possible bounce area. We got a bounce from there, and since then, the price has been shooting up through these other levels. 69 was a good psychological number. And we have a little pivot here, but didn't really hold up or do anything. We got a little reaction there. But price has basically been busting up our levels of interest here. Now it's all a matter of if we're going to flip it or not. If we zoom into this area, we're on the weekly now. You can see how many times we've attacked this area and not been able to close above it. Now, I'm not a big trader or analyst that says if it closes above this level, we're definitely going to go up to higher highs or one way or the other. But I think it would show a bit of a difference in the pattern that's been playing out previously. And something like that can be a clue where prices come up to this level several times and not been able to close above it. If we close above it, that's something different. That could be a clue that the bulls want to keep continuing up and move through this area of interest or level of interest. And this time things are different. So you can see how many times we've attacked this area. The kind of motto or mantra is that the more times a level gets touched, the more likely it is to break. So this could be the break here. We have to wait and see how this closes, and when we get further down, we'll have to rely on our Elliott Wave pivots to see where we are in the larger count and where we are in the larger move, as those can be early warning signs to let us know how the trend is doing. So out here on the weekly, again, I think it'd be ideal if we could close above this. It would show some more strength and that we didn't reject from this area, and that would be a change in the pattern that we've been seeing. Next level up is going to be the 80K area. Again, in Elliott Wave, we're looking for swift moves that display confidence in the direction of the market. We need a little more proof to make sure that the bulls are the ones cooking the pudding, not the bears. With that genius analogy, we're going to stop there and go ahead and dive into the lower time frames. Looking at the bullish count here, again, a lot of this can be up for debate and back and forth conversation on what this really is here. I think this is the best kind of setup as far as the bulls go. Again, because of this overlap and the uncertainty here, this could just be the start of something here. So what if this is some kind of double zigzag, triple zigzag in here, and this is just a 1, 2, 3, 4, 5, and we're still moving up? That's definitely a possibility. Again, we have to wait for that to play out, but I think the most bullish right now is that we keep putting in 1, 2, 1, 2s, obviously. So 1, 2, 1, 2, 1, 2, and we keep moving up. Of course, that's never the most conservative way to look at things at the wave count when we're trading. We actually want to play on the more conservative side, in my opinion. So adding a whole bunch of 1, 2, 1, 2s here is good as long as it stays valid. We can see here that we're already getting a pullback back to the level of 76, and we're going to have to see how that kind of plays out. Good thing about Elliott Wave is that we have certain pivots we can look to as clues. And as these little guys start breaking, I know you might not be able to see that right there, but these are the main pivots that we're looking for. I'll zoom in just a bit. These are the 3 levels that I'm watching right now as this thing retraces. Holding 76 again is going to be ideal if we get a 1, 2, 3, 4, 5. We want to see the higher lows and the higher highs keep printing at the smaller and smaller degrees and have them kind of ripple through the larger degrees as well. Ideally, we want to hold above 75.5 to keep this train going and saying we're still putting in impulses up. I think the minute we start going over to that, we're going to have some issues and we might have to get a little bit creative, which we don't like to do in trading. So these are the levels right now that bulls need to keep an eye on. Alarm. The more that these fall apart and start breaking down, the more we have to zoom out to the larger degree to kind of see where we are, and the less strength we have, and it shows that price action is possibly fading. So now that we zoomed back out a little bit, I think this is an okay count for now. We have to see how this pulls out. I think the last bastion of hope for the bulls is at 70K. If we start breaking down beneath 70K, especially if we start moving swiftly down, we have some issues. Then we can always come back and say, okay, this is some kind of flat, and then we're going up. There's always bulls' hope that the 60K level is going to hold. Because this isn't an ideal impulsive here, bears have something to lean on. If this is ABC and this is our anchor right here, because this is the clearest wave in my opinion. This looks like a 3-wave move. This could be a couple different things. Again, I think it could be an impulse, and that's what the bulls want to lean on. And that we finished a 1, 2, 1, 2, and then we're moving up. And another big thing that we have to look at here is the size of this move. So we start at the origin here, we go to the wave 5 here, and see where we are as far as degree goes. So even this little move in here, this ABC, isn't the same size as far as time goes. So we have to take that into consideration if we're looking for things to be proportionate in the market here. We want things to hit certain levels. 618 is always a big one, and 1-to-1 is really ideal. But it doesn't have to happen, but again, it's more clues that would help us create a case on a certain move. So I'm really looking for some kind of proportion between this move here and the secondary move after we have this retrace here. Now, again, it doesn't have to be proportionate, and by any means, there's no rules or anything. It's just a guideline and something to look for. But that would be ideal, and that would be another clue or another thing that the bulls can use and say, this is a smaller degree right here. So there's no doubt that we're going to retrace here and head on up to the clouds. So that's something that I'm considering too. This is a little sus as far as a degree being equal to this move here, but it's not a game changer at this point. Right now, the bulls are looking to hold this level ideally here at 76. We get a nice impulse up and flipping this into support and heading on up to the 80K level up here. So this would be the next level that we were looking at. And we'd like to get some clarity here because right now, this does not look like a super strong impulsive move. Ones tend to be a little bit ugly. They're not as swift as the wave 3s. A's, typically you want to see an A to be the swiftest move in the correction. And then we all know the wave 3 is going to be the sharpest move, and then wave C again is going to be lazy again and more complex. So to wrap up the bulls side, again, bulls want this to be a diagonal here, a 1, 2. We just put in another 1. We're putting in a 2, and it's going to be blast off time. 70K is going to be the level. If we start breaking that, things aren't looking so great, especially if we get that swift move down and then a correction too. So bulls want to keep the corrections facing down at the smaller degree as long as they can, add hope to the move up. But as we get bigger, eventually we're going to have to get something at the larger degree and get a correction back down. And we're going to break some of these pivots here before we get a potential move up, especially if we can make it look something like as clear as this. So the main area I'm watching here is going to be the 50 to 618 as always. We have some confluence here at 70K. This is my main level. Breaking below this, especially impulsively, is going to be super sus that the bulls are falling apart. And with that, let's dive into the bearish side. So there's no doubt that the bulls are the ones that have to do the proving here. Even at the larger degree, the bears are still in control at this point, in my opinion. They were waving the bear flag back here, and it played out, and they're still looking like they're waving the bear flag here. And is it going to work out? I think we'd have to go with the trend. Right now, the trend is we're putting correctives to the upside and swift moves to the downside, and that hasn't changed yet just because we broke this level. So we have a pivot, 1, 2, 3 breaks, and then a higher low, and then we get this move, ugly ass move to the upside that sweeps it, and we get a pretty deep retracement, 3.9% move above the level of interest before we get the sweep down. And I don't have time to look, but right now I'm guessing this is going to be around a weekend of some sort, potentially. I think it's in all of our interest to consider that this is going to happen just because of the magnitude that we've got here. Look how fast we moved down and how deep. So we moved down almost $30,000. So I think looking to this and trying to get an entry here isn't the worst idea. Just like I was saying that back here, if we think this is even a possibility of a diagonal and a primary actionary wave in a wave as a wave 1 or a wave A, we're looking for that play. We don't care how it plays out. In the end, if we take profit at the right areas, we're going to be a profitable trade. Obviously, this move is a lot better than this move here as far as swiftness and time into profits, but looking at this from a trader's perspective and looking at this move that played out before, I don't think it's a crazy idea to start looking for shorts here. Kind of got the same thing going on here. We got the pivot low here. 1, 2, 3, all with lower highs here. And then we get the sweep of the low there, and we get a move back to the upside. Didn't play out exactly, but it did rhyme quite a bit. And we're going to see if it continues to rhyme and we get it dumped down to go to the 60K level here. So the bears have some good arguments here to say that we're going to be going down, and no one really knows what's going to happen, and it's all conjecture and probability plays at this point. But right now, the bears have a pretty good case on their hands here that we're going to head on down to lower lows, wherever that may be down here, but we're going to end up breaking this low. All right, down here at the 1 hour, one thing I wanted to talk about is the little breakout that we have. So right now, it looks like the breakout traders, anybody that kind of bought into this strength, quote unquote, is going to get wrecked here. But if this pivot holds, this is where I would say that most of the breakout traders are hiding right now, if they're keeping things tight. Could always come back here and hide underneath here as well, but I think buying the breakout wasn't the best idea, obviously in hindsight, but I'm not typically a breakout trader. That has always been my worst trade, is anticipating a breakout or playing a breakout. Because as you can see here, we have just a sweep at the moment and a breach where we didn't blast up, got a little poke above into the weekend, and then we ended up drifting down. Again, that's hindsight, but this is the danger that we have to look at here when we're looking at these pivot breaks. Eventually, when the trend changes, pivot breaks to the upside are going to pay out. Right now, in a bear market, pivot break could just mean that we're doing a liquidity grab. We have to consider that as a possibility here. Every time one of these pivot breaks, like just a little bit above. Anytime we get a little breach like this, it's always sus. When we break a level, we want to break it properly like that. Now, this could still be playing out where we're just going to go sideways above this and move up. But I think the main play here, the conservative play, is that we're going to wait for an impulse to move down. And if these start breaking down, then we're going to wait for that internal retrace. So that's what I'm watching for here. I don't have a super clear count on this. As I was saying before, this could be many things. It's complex and it's ugly and there's overlap. It's not a swift, confident move like we're seeing the ES in the minute. So there's always a chance that this is just some kind of higher high here that's sweeping the liquidity, looking for that liquidity to move to a lower low and break this pivot here to grab some more liquidity down here. So when we're looking for a breach, we can see here that it has played out in the past, and I'll zoom in a bit here. So we have these levels, and we're going to look at what happens after we break above these levels, and if we can use that again to see how we're going to work here. All right, so I have the previous pivots laid out. So we have the high here, price move back down, internal to the pivot low and the pivot high here. We ended up moving up, breaking above this level swiftly. We ended up moving back up within this initial move down from the high, or from the new high, and then we ended up moving away. Every time we broke it, the same thing happened. We busted up above the level, we came back down, correction internal to that level, and then we rolled over. So that's what I'm looking for here. Even here, we had a mini version of it where we popped the level barely, and we moved down, we got a correction internal, and then we moved down to break that low. So that's what I'm watching for here as well. We broke above this level here. If we get a move back down beneath it, I think that would be the ideal setup here, as we get an impulsive move down, correction to the 76 level, and then we roll over like that. So that's what I'm watching for as far as the trade setup goes here. I think it's played out plenty of times in the past, and I think that's a nice conservative trade for me. Now, when futures hit on Sunday and the market opens on Monday, if we get a dump, again, we're going to have to reassess, and the bulls are going to be in trouble if we end up coming down in an impulsive manner here. Again, anything can happen. We can just get whipsawed all over the place, but that's the ideal setup I'm looking for now. Impulsive move here, correction up, continuation on the bear side. All right, with all that being said, let's go ahead and look at the correlations. Looking at the correlations here, I don't think it's coincidence that these all pivoted around the same time. Basically, when one moves in one direction, we're going to be looking for the other asset to move in the other direction. That's basically the correlation I'm looking at here. Right now, you can see ES has moved to all-time highs, which is great, which could add some confidence to the BTC that we're going to end up catching up. And eventually, I hope that's what happens. But right now, because of where we are in the count on ES, I'm a little nervous about what's going to happen in BTC and in Ethereum. And I think it all stems from where the dollar is now. I was thinking maybe on Friday that we were going to get an internal retracement down here and we're going to end up moving up, but it ended up dumping into the news That happened Friday morning, and the DXY started dumping, which threw the ES up even more. I think in the afternoon, DXY started retracing here out of this area of interest. Again, we came back to this area of interest that's played as support and resistance in the past. And we rejected off this area of interest up here. So the levels have been playing out great. Now in the dollar here, I think there's a possibility we have a completed zigzag down, and we don't have proof quite yet. This could be some kind of 1-2, 1-2, 1-2, and we don't, and it could just keep moving down and down. We don't have any concrete pivot breaks yet, so we can't say for sure. But speculatively, I think we have a ABC at the minimum here, possibly complete. But we'll have to see. This is a bounce area in the past, so we could just be putting in some kind of retracement here before we roll over some more and continue down. And that would add up to where ES is in the account as well. I think right now we had a internal 1, 2, 3, 4, 5 with an extended fifth wave here as the wave 3. So we have 1, 2, 1, 2, 3, 4 extended fifth wave, 4, 5. So there's still some room for us to move, but I think last week has extended the price quite a bit, and that was kind of a big move. 2 all-time highs breaking the all-time high. So the fact that we broke an all-time high, we're extended here in a potential extended fifth wave. I think we have to be a little bit cautious here that we could be coming to an end of this internal count here, and then we're going to be rolling over. Same thing here with the rollover up here. I think DXY is going to come back and correct internal, if not move back up. So I think that's what I'm looking for. And as far as the correlation goes, in the DXY and the ES here, I think they both come to the end of a pattern, and that we're looking for some kind of internal retracement. And we have some divergences with us to add to that on the ES as well. So momentum's kind of fading. The news is played out. Donald Trump laid it out for us, and the market was ready and knew about the news. Unfortunately, those large moves didn't really translate over to BTC. We did catch the directional bias based off of this move here and the DXY move here, but it didn't translate 1-to-1. And that's a bit concerning. Again, if we're at the end of a pattern here, what's going to happen when these retrace? Is that direction going to change to the downside, and how amplified are we? If we're bearishly correlated by multiples, we're going to end up moving down and correcting down below this level here. If ES can hold up here and keep it together, flip the all-time high to support and continue moving up, I think that's a much better chance for BTC to continue its move up, as confidence in the major markets here is going to translate eventually over to BTC, and the money's going to start trickling down through the ranks here to risk assets. Sunday in the futures, I think we're going to have a bounce up here, and we're going to start retracing potentially when futures opens. We had such a huge week last week. I'm surprised we didn't get more profit taking. It's 420. There's a lot of things adding up. It's tax day. A lot of things are going to be coming up next week that could drive prices down after such a huge week and even a huge month so far. April's been all up. So the potential for a retrace coming soon, if not Sunday, is what I'm looking for here. We count is a little bit sus in here. We do zoom down to the 15-minute. There's still a potential chance that we're still finishing this move up. Even if we take it as basics here, we got a 1, 2, 1, 2, 3, 4, 5, 4, 5. So there could be one more sweep of this high into the open, and then we get a rollover. And that's what I'm watching for here. There's a potential that we could be done, and this was the top here. But there's always that possibility that we still have some 1-2s here that we have to offset. And when those get offset, especially since we're in such an extended wave, we're going to see a pretty big move. And that's what I'm watching for up here on the ES, is an entry for this retracement here. DXY here bouncing is a good first step. So again, if the dollar keeps bouncing, I think ES is cooked for now, and we're going to end up coming down for a retrace, which unfortunately will transfer over to BTC and the crypto market. That's it. Let's go ahead and wrap it up. All right, to put all my cards on the table, essentially, I'm looking for ES and DXY to retrace and have that translate over to the crypto here. That would play out as we're topped in the ES, where we bottomed in the DXY, and have we topped here in Bitcoin. I think the main tell is going to be the impulsive move down from here. If we get an impulsive move down, I'll be watching for that internal correction and then a reaction down to the downside for the C3 setup. Whether that plays out and translates to a bounce at the 70K level or a move down to the 60K level, in either case, I'm watching for that impulsive move, an internal retracement to that impulsive move, and then a continuation to the downside, taking profits at those areas and profiting off that trade. So I definitely think that the bulls still have to prove themselves here and that the favor is on the bear side. And that's what I'm going to be looking for as my primary move now until or unless we get a move up from here and continuation and a blast up, proving the bulls' confidence in price action. So these are the two setups I'm watching for over the weekend here. I think that the bulls still have a lot of proving to do. If they end up having something corrective come down, I'm going to be looking for a long. But right now, I think this is the primary trade setups that I'm looking for is just C3 setups to the downside, and that the bears are still in control at the moment. That's just what I'm seeing for now. As always, I'm just rolling with the waves as they print. If you have a different take or see something, drop a comment down below. I read them all. If you enjoy this kind of Elliott Wave breakdown and technical analysis breakdown, make sure you give a follow. Also, come follow me over on X. I'm a lot more active there, to be honest. But if you want to learn more about technical analysis, I would recommend coming over to TradeDevils.com and checking out the TradeDevils University. You have a free course here. It's 10 or 12 videos you can check out. If you like the delivery and the information that's given, you can always move on and learn more about Elliott Wave and some of the other methods used in the TDU method. So I would definitely recommend coming and checking this out if you want to take advantage of the bear market and stack up on the knowledge, stack up on the money, and get ready for the next bull run. But that's all I got for today. Trade safe, trade clarity. Take it easy.